Chevron shares are rising after third quarter results beat street estimates. The return to capital here is rather amazing. And we have Mike Wirth, the CEO. Mike, congratulations on a very clean quarter where you're actually, once again, leading the industry. I've been waiting. This is what you've been doing, but no one's been talking about it. Why don't you just give us the stuff of what a good quarter is made of in your industry?
Well, Jim and Carl, it's good to be with you this morning. Their third quarter was good. It was a nice earnings beat. We had strong operational and financial results. We started up some key projects in the Gulf of Mexico, and we returned record cash to shareholders. If I click down on that a little bit, production was our highest third quarter ever in the history of the company. Same is true for production in the U.S., production in the Permian. Project startups, you were out at Anchor last week and saw the technology that's being applied there. We had water flood startups at two other fields in the deepwater Gulf of Mexico, which we intend to grow from 200 to 300,000 barrels a day by 2026. And we distributed over $7.5 billion to shareholders in the quarter, the highest number in the history of our company, and 2x the per-share average of our energy index peers. So a strong quarter operationally, financially, and for shareholders.
Now, Mike, it looks like you're taking out a lot of costs over the next couple of years, and that is directly going to go to the bottom line.
It will go to the bottom line. This is an industry where costs always matter. You have to stay very disciplined on capital. You have to stay very disciplined on operating costs. And our plan is to take absolute cost out of our business at the same time as production is growing. And so unit costs really come down. We've been able to hold unit costs relatively flat for the last several years, despite the inflation you've seen in the economy, but we always have to do better. So we're looking to take $2 to $3 billion of costs out by the end of 2026, grow production significantly during that same period of time, and that should drive more value to the bottom line.
You know, I've been thinking a lot about our time together last week on the platform on Anchor, and reflecting on it, I realized that you genuinely believe in long lead time, long life offshore projects, and that even if new car sales, let's say in 20 years, are 6% EV, I think you believe, honestly, that the gasoline demand is still going to be strong enough that these are good investments.
Well, we allocate capital that can take decades to actually deploy, as you saw offshore, and then these assets are in service for many decades. So we've got to take a long view on supply, demand, technology, and look, EVs are a good solution for the people that they work for. At this point, despite last year being record EV sales, they represent about 2% of the entire U.S. auto fleet, which turns over about once every 2 decades. And so we're going to see demand for gasoline continue to endure in the U.S. And to grow around the world. And I just remind people that maybe 25 to 30% of crude oil production ends up in light-duty vehicles. The balance ends up in a host of other things that are much more difficult to electrify: aviation, marine transportation, long-haul road transportation, off-road transportation in agriculture and mining, or in petrochemicals. And so the demand for our primary products is robust. It grows with the global population and the global economy, and we're going to see our products in demand for many, many decades to come.
Mike, you know, last couple of years, it's been hard to talk about the business without talking about capital return, and you did give some guidance on buybacks for Q4. Is that story evolving in either direction for viewers?
We've bought shares back in 17 of the last 21 years, actually, at the same time as we've grown our dividend for 37 consecutive years. So we've got a very consistent set of financial priorities, Carl. The first is to sustain and grow the dividend. The second is to invest in future projects that grow the cash flow for shareholder distributions. The third is to maintain a very strong balance sheet. And then the fourth is to return the excess cash to shareholders, which, as I say, we've done more than 3/4 of the time over the last 2 decades. And so we've got a durable, robust set of financial priorities. We've got a very strong balance sheet. And it's important in our industry to maintain constancy of purpose through cycles, not only to be generous with your shareholders during the good times, but also as you go through the inevitable cycles of a commodity business. Our shareholders depend on us for constant returns and for disciplined and prudent management of our business in the difficult times. And I think the good companies have a track record of doing that.